In response to the COVID-19 crisis, the Australian government is implementing rescue packages estimated to cost more than $200 billion in the next 6 months. The good news is Australia has the toolkit to pay for the crisis, but we need to be aware that this will take time. As well as responding urgently to people's needs now, we need to start planning for a longer-term economic and fiscal response. In a recent article in the Financial Review, Professor Peter Whiteford and I explained that the COVID-19 crisis reinforces two messages. First, the most important tools that our federal government has at its disposal to manage the economic and social impact are the tax system and the social security or transfer system. To rescue the economy and secure the welfare of the Australian people now and after the crisis, government must apply both taxes and transfers and be agile and responsive in both systems. Many people think of taxes as quite separate from social security or welfare. They think that one group of people in society pays taxes and another group receives welfare payments. And they often criticise welfare recipients as bludgers or welfare dependent. But we know from our research that that's not true. Even before COVID-19, the majority of the Australian population both paid taxes and received transfers over their lifetime, including youth allowance, unemployment benefit, the age pension, disability, family payments or childcare. In addition, we all benefit from public goods, education and health and so on, and pay for those in taxes. The job seeker and job keeper packages double the size of Australia's social security or welfare state, but the payment level just puts Australia in the middle in terms of payment adequacy in the OECD or comparable countries. The recent bushfires were devastating to particular communities, but COVID-19 affects all of us across the Australian population. It's striking that after an extended period of efforts to reduce social security spending, the Morrison government now admits that this system is one of its most important tools for managing the crisis. The job seeker package will provide income support for more than 1 million people who lose their jobs or can't ply their trade, musicians, for example, because of shutdowns. As we move out of the COVID health crisis, we must ensure that Australia's tax system is capable of covering the cost. The uplift in spending for COVID-19 is unprecedented in size. Before the crisis, this year's federal expenditure was estimated at $490 billion for the 2019-20 fiscal year. If the COVID-19 estimated cost of more than $200 billion is reached, this expands government by nearly half. So how will we pay for it? Well, in normal times, Australia's tax system can raise stable revenues for government expenditure, but the COVID-19 expenditure will absorb or is equivalent to almost all the personal income tax receipts estimated for the year, about $230 billion. And that is now an overestimate. COVID-19 has sent the economy into hibernation, in the Prime Minister's words. Many businesses have completely stopped or reduced trading. People have lost jobs and stopped spending. And the global trade, travel and investment is suddenly lower as the whole world deals with the crisis. As a result, tax revenues also drop, and they will not fully recover until well after the economy is back on its feet. People without jobs with less income and businesses carrying forward losses cannot pay taxes. That seems like bad news, but actually, in the short term, it's helpful. Why? Well, the tax system shares the economic loss from COVID-19 across the population. Government, and through it the Australian people, acts like a partner in businesses that carry losses or for people who've lost their jobs. But delivering extra deductions and deferring tax payments does not alleviate cash flow problems for most businesses in trouble. And that's why the business fiscal stimulus payment and JobKeeper package, providing a wage subsidy for more than 6 million people through their employer, are necessary. In the short term, the Prime Minister's much vaunted fiscal surplus is going to disappear. In fact, the government will have a large fiscal deficit. That will be financed mostly by borrowing or government debt. Last December in MyEFO, gross federal debt was estimated at $556 billion or 28% of GDP. In the short term, the COVID-19 package may increase this by half again. Scott Morrison says it could take years to pay down the debt. That's quite reasonable. Fiscal policy is a test match or a whole footy season. It's not 2020 or sudden death. Debt can be paid down gradually over time, using our taxes as the economy rebuilds, though we need to keep an eye on interest rates, which are very low at the moment. It's worth pointing out that the estimated Australian debt is far lower than the debt of many comparable rich countries, even before COVID-19. Australia is in a good position to manage the fiscal risk, but we are also affected by what happens elsewhere in the globe. So there are two important things that we need to achieve to rebuild tax revenues. First, we need to get the economy back into production. Drastically cutting expenditure and welfare payments after the crisis is over would put longer-term recovery at risk. Funding recovery and paying down debt is feasible with a robust tax system, and we need to secure and improve our tax capacity with carefully planned incremental tax reform to broaden the base and close loopholes in our income tax, company tax, and GST. Younger workers bear the brunt of the COVID-19 economic and social crisis, so we need to ensure our tax system applies fairly to capital and assets, as well as wages. That means we need to be taxing property shares and retirement savings more fairly. Those are earned more by the older generation than by younger workers. Since the last economic crisis, the global financial crisis of 2009, a decade ago, experts have been warning that the tax system needs reform. The Morrison government has shown it's willing to spend big when needed, but it's not yet clear that it will engage in necessary tax reform. The 2024-25 tax cuts for our personal tax rates were never good policy. They seem foolhardy now and they should be wound back. It would be better to do that and keep some of that broader spending on a more wide social security net, childcare and health that benefits all of us as workers and families in Australia. So what happens next? Well, our tax and transfer systems are crucial social infrastructure. Social security is not a burden on society, and the excessively conditional and rationed income support system we previously had is past its use-by date. And we need to be honest about paying for the crisis. We will need more taxes, and we have to spread those fairly across young and old while not impeding essential business investment. Just as we need to be better prepared for our health needs in future, we should ensure our tax and transfer system has some excess capacity to respond to future economic and fiscal risks. How does it happen? Well, the government has postponed its annual budget, normally in May, until October. The budget's the central place for our accountable debate about taxes and government spending in the Parliament. It's a crucial part of the process. We'll have to wait till then and coming year budgets before we know the longer term impact that COVID-19 will have on all Australians.